Today on the Chad Slagle Show, coaching you to and through retirement.
We are going to discuss how the emotions greed and fear affect you and your everyday lives.
And on our Coach's Corner, we're going to help you determine if you are prepared for the next bear market.
And on our Chalk Talk segment today, we're going to show you 3 steps that you need to take to prepare for the next bear market.
So sit back, relax, and learn. The Chad Slagle Show starts now.
I'm Chad Slagle. I believe financial planning is about educating people and empowering them to make better decisions with their hard-earned dollars. Coaching gives me satisfaction from watching a player succeed and get better. You need an experienced team around you. The best coaches have great assistant coaches. I have brought a lot of the techniques and structure I learned from playing and coaching football and apply them to the world of investing. My goal now is to coach as many individuals and families as I can on how to get successfully to and through retirement.
Welcome in, everyone, to the Chad Slagle Show, coaching you to and through retirement. I'm Wendy Erickson here with the coach, Chad Slagle. Today on the Clipboard segment, we're going to discuss how the emotions greed and fear affect you and your everyday lives.
That's right, Wendy. As we all know right now, the stock market has been hitting all-time highs almost on a weekly basis. And it pretty much seems to only be going up and up over the past 9-10 years. And this is a good thing because it's helped a lot of you who are retired, or those of you that want to retire in the next 3 to 5 years, really rebuild that nest egg from the losses you incurred maybe back in 2007, 2008. However, too much of a good thing can breed overconfidence. And the problem is a lot of investors start reacting with emotion, not logic, which is called behavioral economics. And one of those behaviors is what we call hindsight bias, where we only remember the good times and gloss over the bad. We as investors tend to take a nostalgic view of the past winners, but forget about the past losing investments. We see strong returns and we get greedy, leading us to often take on more risk. And overconfidence combined with a stock market that continues to go up can cause those of us who are moderate or conservative investors to really act like an aggressive investor. And a great quote from Warren Buffett really brings to light the investment world. And that quote is, "Be fearful when others are greedy and be greedy when others are fearful." In most experts' opinions, it is only a matter of time before we experience a correction or the next bear market. So whether you're 1 year, 5 year, or maybe 10 years away from retiring, you cannot expect this market to continue to go up for the rest of your retirement journey. You need to be proactive and build a game plan to insulate your portfolio from a possible downturn in the market.
You know, I have been feeling really great as a pre-retiree, paying more attention as I get closer to what the stock market is doing and how my investments are going. And I've been feeling really good to the point where you forget, you don't worry about the fear part of it and the fact that you really can lose money, and that would be really bad, but we got to remember that.
Yeah, and if you're 30, 40, or even the early 50s, it may be not as big a deal. You got time to make up for those losses, but when you're 2, 3, or 5 years out from retirement, or if you're retired now, you can't afford to take that much risk. So today, we want to talk about how to continue to get the growth of the market if it continues to go up, but most importantly, how to protect yourself if we have that 10, 15, or maybe even that 20 or 30% correction the next year or so.
I really like that quote you mentioned too. I'm going to have to remember that one.
That's right.
When we return on the Coach's Corner, we're going to help you determine if you're prepared for the next bear market. We'll be right back.
The number one concern of retirees today is outliving their hard-earned dollars. It is more important now than ever to educate and empower yourself to make better decisions with your money that it has taken you 30 to 40 years to accumulate. How do you do this? By using our financial GPS, our guided planning system. This is a 4-step process to help get you successfully to and through retirement. The first step in this process is to create clarity. Here we will help identify your goals as well as your concerns and identify what you want to accomplish in retirement. The second step, we will analyze the risk you're taking with your current portfolio, and this step will also identify exactly what you are paying in fees. In the third step, we will evaluate and assess your current plan and help identify the gap between the missing pieces. And in the fourth and final step, this is where we will work together to implement a plan of action to accomplish your retirement goals. And this process can take place at any one of our convenient locations in Missouri and in Illinois. So call now to get set up on that right path on your journey through retirement.
Are you retired or wanting to know if you can retire in the next 3 to 5 years? Are you concerned about the new Secure Act, the biggest change in the retirement system in the past 13 years? If so, then this class is designed for you. Reserve your seat now for Empower University, an educational course for pre-retirees and retirees, hosted by Chad Slagle and his team of investment advisors. Call 844-608-1872.
Welcome back to the Chad Slagle Show, coaching you to and through retirement. We are back with the coach, Chad Slagle, and his colleague, Chad Tobin. And today on the Coach's Corner, we're going to help you determine if you are prepared for the next bear market.
A bear market is a term describing a period when the stock market is off 20% or more from its highs. And it is an inevitable part of investing, unfortunately. On average, a bear market can be expected once every 3 years, although it may not seem that way right now. But they may also seem that way because many of you out there have short-term memory when it comes to the markets. Yes, I'm sure you all remember what happened back in 2008, but do you think today the same way that you did back in 2008 or 2009 when that happened, when you lost maybe 20, 30, or maybe even 40% of your nest egg? My guess is probably not. Instead, many of us hope for the best. But do you really plan for the worst when it comes to your retirement? You need to be prepared. And too often we see people come into our office today and all they care about is how much money they are making on their investments, what kind of returns that they've had the past year. So we have to bring them back to reality and help them understand the retirement mindset and how to prepare for the next bear market, really just the next cycle of the market, because we all know it has to come at some point in time. There has to be a correction, Chad, and you want to make sure that you're prepared.
Yeah, we all heard the saying, what goes up probably must come down. And I think, none of us want to think about this. None of us want another bear market, another 2008 type market to come in. And, Chad, you and I, so often we sit with clients and, when we do maybe talk about that, they know exactly how they felt in 2008. So we don't want to think about it. But many people, what we see, don't prepare and don't plan if something like that were to happen again.
And Wendy, when we talk about a correction, it doesn't have to be 30 or 40 or maybe even 50% what a lot of people lost. Right now, if somebody getting ready to retire here in the next 6 months or year, if they lost 10, 15, or just 20% of their portfolio, that's a huge hit to them and the game plan that they had set up for retirement if they lose 15 to 20% of that portfolio.
As you pointed out, in 2008, I was in a much different place, and it didn't bother me as much as what was happening in because I was further away from retirement.
Right.
And I'm closer now, and so I can now see the impact of something like that. And I'm sure all of you out there, whatever place you're in.
It's a new decade,
right? It's a new decade. I'm a lot closer to retirement, so yeah,
right.
We've got to be prepared. I think my husband and I talk about that all the time. You remember what happened in 2008, so.
Yeah.
All right, so we better give people the information to be prepared for something like that. So, jumping in, what's the first point that we need to do to prepare for something
Well, as I
like
mentioned
that?
earlier, you have to understand the emotions we have when it comes to, investing our hard-earned dollar that has taken us 30 to 40 years to accumulate. So two of those are greed and fear. And two emotions that drive the stock market, greed and fear. Greed has been driving the market, as I mentioned, for the past 10 years. Many people aren't fearing the market right now. Are you prepared for the worst? Unfortunately, what we see with a lot of retirees today is they are not prepared. What do I mean by that? In other words, there's no stop loss, no covered calls, no hedge funds, nothing. A lot of you at home are probably completely naked in the stock market with all of your life savings or all your retirement accounts. Why? Because unfortunately, a lot of advisors that you will sit down with today, they're only focused on the accumulation and growth of your money and not necessarily the preservation, holding on to what you have and making sure that you do not get blown up when that market goes down.
Well, when you think about it, none of us like to be afraid. And fear is often we react when we get scared. And instead of being proactive to try and lessen the fear that we're going to feel. So, tragedy or tragic happens usually until I think fear starts and then a tragedy happens. So we just want to try and kind of be proactive instead of reactive when fear does creep in.
You don't want to be chasing the markets, especially as you get closer to retirement. You want to be proactive. Is there going to be a 10-15% correction? Probably so. When that happens, you don't want to have to take all of your money and throw it on the safe side and then be worried about to get back into the market when the market comes back up. You want to be proactive and not reactive, and that's something we're going to talk about a little bit later, how to set your portfolio up properly for when that does happen.
All right, so what's your second point about bear markets?
So the second one, which is very big today, because as we talk about on this show a lot, we're in a pensionless society, is the maybe income plan. Many of you are out there getting ready to retire or already retired, have a lot of your money sitting in the stock market, and maybe you're following that 4% withdrawal rule. So if you have $1 million saved, that means you need to draw approximately $40,000 a year from your investments to live comfortably. But let's say the market has a 25% correction the next year, and you're drawing that money out, and if you have a 25% correction on your $1 million, you no longer have $1 million. Now you have $750,000. So now, in order to get that same $40,000 a year to live off of, now you got to go in and draw around 5.5% of your money out just to get you the same income that you need.
Well, and I think, none of us have any idea how long we're going to live. We wish we did, and this would all be a lot easier math problem if we knew exactly how long we were going to live, but we don't. So you don't want to have what we talk about, what Chad just mentioned, that maybe income plan, where we're hoping that this market's going to provide us the income we're going to need and we don't run out of money. So we talk about not having the maybe income and building that family pension for you.
All right, and the last point is the accumulation mindset.
Which is what I just mentioned a little bit, but the accumulation phase or the accumulation mindset starts at about age 20 when we start working until about 60, 62 when we decide to retire. And the whole mentality is here, grow at all cost. However, when you get to the point you're about 60, 62 years of age, when you're retired or thinking about retirement, now you need to focus on holding on to what you have, using it, make sure you have enough income to last throughout the rest of your life when you retire, and make sure that money never ever runs out, because it's about time and it's about earning capabilities. You want to make sure those are on your side. As we've talked about, if 100% of your money or a lot of your money is sitting in the stock market, it may or may not last. Why? Because we have no idea what's going to happen in the market, and we have no idea how long you're going to live. So you want to make sure that you change that way of thinking, again, as you get closer to retirement and start insulating your portfolio from a downturn in the market.
Well, we see most people are stuck in that accumulation phase, that grow at all cost, and they maybe are getting ready to retire, or they've already retired and they're still in that accumulation phase, grow at all cost, but when they really should be shifting and their mind's telling them to shift over to that preservation phase.
All right, to download our free white paper today about what to do in a down market, visit slagelfinancial.com/empoweryou. And coming up on Chalk Talk, we're going to show you what 3 steps that you need to take to prepare for the next bear market.
Okay, let's go.
He's such an involved dad. He's always telling the kids stories. I remember when so-and-so said I couldn't do this, or I didn't make this team. That's what drives him. In our family, we always tell our kids to stick up for each other, stand behind one another. He feels it's his role to provide, keep us safe, and to make sure that the kids are taken care of. A lot of Chad's clients have the same traditional values, and he bonds with them. Each family has a different set of circumstances, and each family is unique and different. The common thread between all of Chad's clients is that they want the best for their family, just as he would our own family.
Welcome back into the Chad Slagle Show, coaching you to and through retirement. So we just discussed some common problems we see when it comes to investors and not being prepared for the next bear market. Now we want to help you overcome those problems by giving you 3 key steps to take.
You know, Wendy, the main thing I want all of you to take away from today's show is to be proactive, not reactive as you get closer to retirement. Invest and participate in this market as long as it continues to increase, but be prepared for when it drops. The best time to prepare for a bear market is when a bull market has run for many, many years and the market is near record highs, which again, we're seeing each and every week. And this is describing the exact economy, of course, that we have right now. You know, and as we mentioned, it's continuing to go up week after week, with nothing but greed and comfort running through all of our minds when it comes to investing our hard-earned dollars. Well, as soon as that market takes a big hit, we enter a bear market, that's when everyone is going to panic, when it's too late. And then you lose a big portion of your nest egg that you just worked 30 to 40 years to build up. So in order to avoid this from happening, you have to build a plan, a retirement game plan. So if you're only 2 years or 3 years away from retirement, you cannot afford to be complacent today. You cannot afford to lose sight of the amount of risk you currently have in your portfolio, or what could happen to those long-term goals. Those investments are there to help you attain, which I think is so important. Again, it doesn't matter if you're 2 to 3 years from retiring or if you're just retired, you have to have that game plan, which is so important today, Chad.
Yeah, and I think as we go through this segment, you know, we're hoping to kind of share some of those ideas and to help you be better prepared. So whether the market continues to go up or does have a correction, you have that peace of mind with your portfolio to get you through it.
All right, so your first step is the rule of 100.
The rule of 100. When we talk about investing for retirement or retirement planning, it doesn't have to be difficult, doesn't have to be hard. You just basically have to keep everything simple. And the one way you do that, first of all, is with the rule of 100. And the rule of 100 originally came from John Bogle, the founder of Vanguard. And of course, we've taken this rule and modified it slightly, but very simply, take your age minus 100. So if you're 60 years of age, what that means is 60% of your money should be invested more conservatively, where if the market has a downturn, it's protected. And then, of course, 40% of it is at risk in the market. That money's there to grow, to keep up the rate of inflation and cost of living. And again, it's not cookie cutter. It depends on your risk tolerance, Chad, your income needs, your lifestyle goals, your family dynamics, your liabilities, and part of your assets, of course, are your investments.
Yeah, and I think this is a great place, you know, to have this conversation. You know, a lot of people are so used to just having everything on that risk side and working in the Wall Street world. But now, you know, we share a couple different strategies, a couple different types of investments and worlds to invest in, and it's a great conversation starter to get us moving in the right direction.
All right, and the second step has to do with 401ks and retirement
And this is
plans.
for people that are still working. If you have a 401k or company plan through work, you want to make sure that you separate your money into two different buckets. Number one, on what you have made in your 401k and what you could make in your 401k. So what you have made, in other words, if you have $500,000 or $750,000 in your 401k now, that's money you've made. Do not continue to risk that money. Move that money into investments that are more conservative or safe. Number two, what you could make. This is money that you're pumping in every pay period, every couple of weeks when you get paid. This is the money you want to take more risk, because if the market is going down, you can invest as it goes down, Chad, and then when it comes back up, you're going to have a bigger gain. That's what we call dollar cost average. So again, if you have those 401k or company plans, do not invest all that money in one way. Conserve and save the money you've already set up, and really the money you've already won, if you will.
Yeah, and I think, you know, it was just this week sitting with a client that actually had most of this, their 401k in company stock, and they're getting ready to retire here in a couple months. So we talked about that. So we talk about, you know, if you have that $1 million that you've already built up, you know, put that over here, make sure you have a safe game plan for that, and the new money that you start contributing and keep contributing, you want those in investments with more growth. And if this market does correct yourself, you're only losing on a very small portion.
Unfortunately, Wendy, we see a lot of people that have all that money all invested in one place. As Chad mentioned, even if they're 6 months or a year away from retirement, they're still taking way too much risk.
Yikes. Well, what about the final step, the three buckets?
The final step with the 3 buckets is making sure that as you get closer to retirement, you need to separate your money into 3 different buckets. That secure bucket, where you know it's safe, but also that's where your income's going to come from. You need an income stream that's going to come in each and every month for the rest of your life. That's going to be in the secure bucket. Once you have that set up, then we can have money sitting in the growth bucket, which is there to grow. It's there for the long term. It's there to keep up the rate of inflation and cost of living. And if the market's down, it's not a big deal sitting in that growth bucket. Why? Because we have the income we need coming in from that secure bucket. And then the third bucket is what we call that dream bucket, that extra bucket, that money you may have set aside for your children or your grandchildren. But also, there's a lot of changes, Chad, that are coming up with the Secure Act. That just took effect in January of 2020, where that multi-generational IRA is gone. So now, if you're a higher net worth individual, say you have over $500,000, you have to be more creative with ways, number one, on when to draw that money out, because again, taxes are going to go up. It's already baked into the current legislation in 2026. But also, how do you pass those assets on to your beneficiaries now? Because they have to draw that money on a 10-year period. They can't take it over their life expectancy. So a lot of big changes and a lot of gray area that you really need to start taking advantage of.
Well, and using all three of these buckets, secure, growth, and dream, now all of a sudden it puts you in a place to where you can be proactive. We can start doing some planning each and every year based on the new Secure Act to pay taxes now, to eliminate, to get tax-free income down the road, to plan for your legacy, for your kids and grandkids to have tax-free monies passed on to them in that situation. So you got to be prepared and be able to take advantage of these new changes.
Some really good information. To download our free white paper today about what to do in a down market, visit slaglefinancial.com/empoweryou. And when we come back on our strategy play, the Chads are going to show you how to be proactive and not reactive with your game plan for retirement.
The number one concern of retirees today is outliving their hard-earned dollars. It is more important now than ever to educate and empower yourself to make better decisions with your money than it has taken you 30 to 40 years to accumulate. How do you do this? By using our financial GPS, our guided planning system. This is a 4-step process to help get you successfully to and through retirement. The first step in this process is to create clarity. Here we will help identify your goals as well as your concerns and identify what you want to accomplish in retirement. The second step, we will analyze the risk you're taking with your current portfolio, and this step will also identify exactly what you are paying in fees. In the third step, we will evaluate and assess your current plan and help identify the gap between the missing pieces. And in the fourth and final step, this is where we will work together to implement a plan of action to accomplish your retirement goals. And this process can take place at any one of our convenient locations in Missouri and in Illinois. So call now to get set up on that right path on your journey through retirement.
Are you retired or wanting to know if you can retire in the next 3 to 5 years? Are you concerned about the new Secure Act, the biggest change in the retirement system in the past 13 years? If so, then this class is designed for you. Reserve your seat now for Empower University, an educational course for pre-retirees and retirees, hosted by Chad Slagle and his team of investment advisors. Call 844-608-1872.
Welcome back to the Chad Slagle Show, coaching you to and through retirement. On this week's strategy play, we're going to show you how to be proactive and not reactive with your game plan for retirement. And I think that's what's so important, Chad, that we want everyone, again, to take away from today's show is we still want you to be able to invest in the market as it continues to go up, but you also have to be proactive and protect yourself. And the way you do that is by building a game plan and being proactive. Don't react when the market goes down. We don't want to chase that market, if you will. So when we talk about are you prepared, let's talk about the example we've set up here with someone who retires or a couple who retires with $1 million in their portfolio.
Well, as we talked earlier in the show, a lot of people we see are continuing to stay in that accumulation, that grow at all cost, because we forgot what 2008 was like, and maybe we're in a different phase of our lives. But you see here that full $1 million that we spent 30 years or more accumulating, we still have all that money sitting in the market, in stocks, in equities, maybe even in some bonds. But if we go through another 2008, where the S&P lost about 37%, our $1 million, just because we're staying in that accumulation phase, is now down to $630,000, and maybe we just entered retirement. Versus example number 2, that same $1 million being proactive, using that strategy of that 100 age rule conversation starter, maybe we set 60% of that money on the safe side to protect, to get some slow, steady growth and provide us that income. We still have 40% of the money in the market. Hey, if it goes down 37%, we're down $148,000, but we still have over $850,000 left to continue that retirement plan.
And the whole key here is to be proactive, not be reactive.
and do not chase the market. We know it's going to have maybe not a 37% correction, may have a 10, 15, or a 20% correction. The key is we don't want to chase and react to the market. We want to be proactive with the game plan that we build, and that's exactly what we're doing here, setting it up where you have the income stream that's going to last throughout the rest of your life, no matter how long you live and no matter how long your spouse lives. But we also make sure that we have some money here for the growth of the market. Are you worried about the next bear market and how it can affect your nest egg that you've worked so hard to build? Do you need help building a better balance for your retirement and your portfolio? If so, we encourage you to give us a call today, and that's this week's Strategy Play.
If you have any questions about today's show, or if you'd like for us to discuss a new topic, email us at askchad@slaglefinancial.com to have your questions answered on the show. And we'll be right back with some of the key takeaways from today.
Coach Chad Slagle and join.
I'll be with you guys in just a few minutes.
When it comes to your health, your life, your family, your home, and your hard-earned dollars, of course you want to make sure you're working with that sharp, energetic, knowledgeable individual that is always looking out for your best interest.
Such short notice, appreciate it. Thanks.
It's time to get your financial house in order. This is the new age of retirement planning. In the Wall Street world, that's what they talk about. You got to have
Now back into the Chad Slagle Show, coaching you to and through
We
retirement.
are Slagle Financial. Call now, 888-294-9248.
Welcome back to the Chad Slagle Show, coaching you to and through retirement. We've covered a lot of ground today. What would you say are some of the key takeaways, Chad?
Number one, Wendy, as Warren Buffett said, be fearful when others are greedy, and be greedy when others are fearful. Number two, understand the rule of 100, how to determine your proper safe risk ratio. And you want to make sure that you set up now while the market is up. Do not wait until you lose money before you start setting that plan up. And number three, make sure you set up all three buckets for your retirement. That secure bucket, that growth bucket, and that extra bucket, whether that be for wealth transfer or tax planning. And understand, crisis planning does not work. You can't wait to build a game plan when the market starts to drop.
All right, and one more reminder to download our free white paper today about what to do in a down market. Visit slaglefinancial.com/empoweryou. Slagle Financial and their team of advisors have educational events coming up in your area to make sure you are prepared for today's retirement. For more information and to sign up for one of these events, call 888-294-9248 or visit chadslagleshow.com.
Remember, folks, success is waking up in the morning, whoever you are, wherever you are, no matter how old or young you are, and bounding out of bed because there's something out there that you love to do, that you believe in, that you're good at, and you can hardly wait to get at it again today. At Slagle Financial, realize that this is bigger than our team. It's about educating you, the public, and our wonderful clients, and empowering you to make better decisions with your hard-earned dollars. For my colleague, Chad Tobin, my co-host, Wendy Erickson, this is the coach, Chad Slagle. Thank you very much for joining us. We look forward to visiting with each and every one of you next week.